We recently announced that we had completed the divestiture of said business, and that's actually a positive for the company, which leaves us with kind of our North American core, which is three businesses. We have a satellite communications division, we have an infrastructure division, and we have an embedded division.
All right, welcome back inside our proactive newsroom. And joining me now is Leighton Carroll. He is the CEO of Baylin Technologies. And Leighton, it's good to see you. How are you?
Likewise, good to be here.
Good to have you along. Excited to learn a bit more about what's been going on at the company. I know it's been very busy. First, before we get into all that, maybe talk to me a bit about the company and the work that you do.
Yeah, so Steve, Balin is honestly, I think it's a really cool tech company, and it's been quite the journey. It's we do effectively, we've historically done four things. We've had a mobile business, it's putting antennas into Samsung smartphones predominantly. We recently announced that we had completed the divestiture of said business, and that's actually a positive for the company, which leaves us with kind of our North American core, which is three businesses. We have a satellite communications division, we have an infrastructure division, and we have an embedded division. Satellites, we don't put things in space. We don't make dishes. We make, in particular, high-powered gear that makes that stuff work. Give you some easy use cases. If you like golf, if you like football, the NFL Super Bowl, the Masters golf tournament, those broadcasts you see on TV, they're powered by our gear. When the NASA Artemis lunar space mission happens and the lunar modules are going out to the moon, communication from the Earth to them is powered by us. Lots of NATO government applications as well, typically Western world applications. Kind of a cool business, lots of good technology, headquartered in Kirkland, just outside of Montreal.
With those three businesses that you mentioned, they all are you all pushing them at the same amount? Do they all sort of bring in the same revenue, or is there one that really sort of pushes forward from the other two?
Yeah, we're actually pretty balanced, and that's actually a good part of the story. When I got here, there was decent amount of revenue in the mobile business, but the margin profile, that business, low margins, low pricing power, commercial power, low intellectual property, and very much at the whims of your customer. Lots of customer power, if you will, and that's a difficult business for us to be in. Whereas the other three businesses, they're all predicated on unique intellectual property, better ability to control how we play in our markets. And we have really bright people in each of those teams. And effectively, the satellite business has had pretty decent revenue, and we've certainly been growing that business. The embedded business has been solid, but the infrastructure business is a bit of the success story of our turnaround, in that over this past three and a half years, we've really changed our go-to-market strategy. We've really changed our customer relationships. We have different product diversity. We have way better revenue diversity and customer revenue diversity than we've ever had. And that business is growing. So effectively, we're kind of 40-30-30 between satellite and the other two businesses in terms of our revenue build. And in terms of potential, I'm actually very excited about the infrastructure division, because wireless infrastructure has been a down market. Q3 to Q4 was terrible for most companies. Just go look at CommScope and see their results. And Q1, Q2, we've been growing in our wireless infrastructure division in a down market. That's interesting, because you don't do that unless you got a few things right. Customers really love what you've done for them, the products you have. And, kind of, at least the way that I think about it, wireless infrastructure investment has been down. It's not going away, and there will be strengthening. Well, as that strengthening happens, we're really well positioned to take advantage of it.
Yeah, and it really showed that in some recent announcements that you made, and the wireless amplifiers, a big over $2 million contract in not only sports, entertainment, all that kind of stuff. So it sounds like those, what you're talking about is really coming to fruition with these type of contracts.
It is, and look, I give the team all the credit in the world. We've really focused on how we've positioned each of the businesses, where we invest. I would argue we're probably hyper efficient at this point, because we've had to be, and that's actually taught the company a lot of valuable lessons. But what we do and how we position the amplifiers, we're really unique in terms of our ability to deal with high power applications. Those aren't going away. In fact, the investment continues. Within wireless infrastructure, our ability to handle very particular use cases for wireless carriers, we have an innovative product line called a multi-beam. We never really sold into Europe, right? And I can't go over there and say, hey, I'm Leighton, I'm a nice guy. Can I sell you some antennas? They're not going to care. They're incumbents. There are plenty of people there. If you don't have something that's compelling and has a real value proposition, and oh, by the way, for my job, we make good margin on, we're not going to break into Europe. We now sell carrier direct, Telecom Italia, Vodafone, lots of carriers over there. We've had announcements now in multiple British Premier League football stadiums. It's kind of neat because that's all greenfield for us, and we've entered the market based on the strength of our technology. That's fun.
Yeah. You mentioned that obviously the company is seeing a bit of a turnaround in the last few years, divesting of one of the non-core businesses, so to speak. And that's really starting to showcase in your most recent financial numbers as well, where you're seeing the positive uptick, which is a really good one for the company.
Look, we're excited. Like I said, some of the markets we operate in, first of all, they're intensely competitive.
Yeah.
Um, and they have been challenging in terms of the macro market, and yet we're growing. That's a function of the quality of the technology, the innovation we have, and how we've decided to play in the market. And it sets us up for a decent amount of runway in front of us, which is actually really cool, right? I mean, I was brought here some 3+ years ago to effectively turn around Bayland. Unfortunately, there were some decisions made that the company was not doing great. There was certainly pressure on our share price, in part because we had to dig out from where we were. And by the way, I didn't do interviews like this or talk to people because it was, shut up and go to work and get the company to live up to its potential. And we're now starting to do that. That's why I would do something like this. And it's actually fun to talk about what we've accomplished and where we're going.
Absolutely. Well, it sounds like it's very interesting over the next 6 months to a year. We look forward to following the story on it. Leighton, thanks so much. Congratulations on the success. And again, we'll be following you.
Steve, thank you.
All right. Leighton Carroll, the CEO of Bayland Technologies.